When people talk about the best long-term investment, two names always come up: gold and Bitcoin. Both are seen as stores of value, but they are very different in nature, risk, and potential rewards. Gold has been around for thousands of years and has stood the test of time through wars, economic crashes, and political changes. It is a physical asset, meaning you can hold it in your hand, and it is accepted and valued all over the world. The price of gold generally stays stable, moving slowly over time, and it is known as a safe haven in times of crisis. When economies weaken or inflation rises, investors often turn to gold to protect their wealth. The downside is that gold's growth is limited. It can hold value and rise slowly, but it will never give you massive returns in a short time. For example, in the last decade, gold's price has grown steadily but not explosively. Holding gold for 10 years is like choosing safety over speed. Your money will likely be protected, but it may not multiply dramatically. On the other hand, Bitcoin is like the wild younger cousin of gold. It was created in 2009 as a digital form of money. With a limited supply, only 21 million Bitcoins will ever exist. Because of this scarcity, many people call it digital gold. Bitcoin has no physical form. It exists only on the internet through blockchain technology. The big attraction of Bitcoin is its massive growth potential. In just over a decade, it has gone from being worth a few cents to tens of thousands of dollars per coin. Many experts believe that as more people, companies, and even governments start using or accepting Bitcoin, its price could rise much higher in the next 10 years. Some predict it could reach $250,000 or even $1 million per Bitcoin if adoption continues to grow. But there's a catch. Bitcoin is extremely volatile. Its price can rise or fall by thousands of dollars in just days or weeks. In 2021, Bitcoin hit an all-time high near $69,000, but then it crashed below $20,000 in 2022 before starting to recover again. This kind of volatility scares some investors, while exciting others because it offers both risk and reward. Regulation is another difference. Gold is accepted everywhere, with no government controlling its value directly. Bitcoin, however, faces uncertainty because some countries may regulate or even ban it, while others embrace it as the future of money. Still, its decentralized nature makes it hard to control fully, which is part of its appeal. So if you have a 10-year horizon, what should you choose? If you prefer stability, lower risk, and a proven track record, gold is the safer option. Your wealth will stay protected, but growth will likely be slow. If you want high growth potential and are willing to handle big ups and downs, Bitcoin could give you far greater returns. Some experts even suggest splitting your investment, maybe 70% in gold and 30% in Bitcoin, to balance safety and opportunity.